Friends, welcome to a stock like this video. The guest of this video is Constellation Energy Corporation, or CEG by its ticker symbol. It is one of the most talked about energy stocks recently. In particular, it meets the electricity needs of artificial intelligence and data centers quite well. And it is one of the companies at the center of the AI energy story. So, what exactly does CEG do? CEG is one of America's largest clean energy producers. The company's greatest strength is its nuclear energy side. It owns one of the largest nuclear power plants in America. Besides this, it also has natural gas, hydro, wind, and solar energy. Of course, the company's total energy capacity is at a level of approximately 31.67 million watts. This is an incredibly large number, of course. Especially its ability to provide 24-hour uninterrupted energy makes it extremely valuable for AI data centers. This is because data centers do not want intermittent energy like solar. They require continuously running energy. So why has it become so popular recently? The main reason is AI and data centers, along with nuclear energy regaining value and meeting the energy needs of giants like Microsoft, Meta, and Amazon. There is naturally a lot of demand for the stock. AI systems, in particular, consume an incredible amount of electricity. Systems like chat, data centers, and GPU clusters draw serious energy, which is why large tech companies have started making long-term energy agreements. Why does CEG stand out here? It has a massive nuclear energy capacity, it can provide carbon-free energy, and it can produce stably 24/7. The following thesis is being discussed in the market. If AI is going to grow, electricity is needed, and if electricity is required, nuclear energy companies can win. This is already seen in this stock, as it has been maintaining an upward trend for a long time. Another point is this: why was the Microsoft agreement so important for CEG? One of CEG's biggest stories is doing projects connected with Microsoft. The company is trying to reopen the closed 3 Mile Island facility. This facility is now called the Crane Clean Energy Center and aims to provide energy to Microsoft data centers. This event made a big splash in the market. The reason for this was that the reopening of closed nuclear power plants in America was very rare. Making a special energy agreement for AI is seen as the sign of a new era in the sector, which is why investors started pricing CEG as the energy provider of AI. In fact, as you will see, there was a profit-taking sale in April 2025, and in the last year, it has gained almost 2.5 times in value. So, what is their financial situation? In CEG's prominent figures, its annual revenue has reached approximately $30 billion, and its net profit was approximately $3.8 billion. EPS growth was strong, and most analysts still seem to be on the buy side. The results in the first quarter of 2026 came in above revenue expectations and beat EPS expectations, while the company maintained its annual targets. The market is drawing attention specifically to this: data center agreements, long-term energy contracts, and the acquisition of Calpine. So, why is the acquisition of Calpine important? One of the biggest moves CEG made was acquiring Calpine. Thanks to this acquisition, it strengthened on the natural gas side and established a larger energy network across the United States. Data center customers can now be offered a wider capacity. In other words, the company is transforming into a giant energy infrastructure player, not just a nuclear stock. What are the strong sides of the stock? Electricity demand is the biggest story, of course. As you know, as AI data centers grow, the need for electricity multiplies, and CEG is one of the companies that can benefit from this. What are the advantages of nuclear energy? It operates uninterrupted, is carbon-free, and production is done on a large scale, which is why it is becoming popular again. As for long-term contracts, the long-term agreements made with companies like Microsoft and Meta provide predictability, along with its transformation into a giant infrastructure company. The Calpine move has made the company even larger in scale. However, just as there are advantages, there are also disadvantages. Let's touch upon what these are, if you'd like. This part actually needs to be understood very well. The stock rose very quickly, as you can see. For instance, even in the near term, the stock, which was at $67.23 in March, had gone up to $411 at the beginning of the past year. Due to this, regulatory risk comes into play. Because when we look at the chart, it is clear that slight profit-taking sales have arrived in an uptrend, and even a nice triangle has formed here. It is understood that the sales are met at the $269 to $270 level. What we mean by regulation is this: state permits, security processes, and policy decisions are also very important. Permits were especially critical during the reopening process of 3 Mile Island. What are energy price fluctuations? If electricity prices fall, margins could be suppressed. The pressure of high expectations is also quite significant. The company now looks like an AI energy leader, which is why strong growth is expected every quarter. New agreements are expected. If these do not materialize this time, this chart we have climbed up may start to experience slight pullbacks. In fact, we have tested this a few times in the past. Look, the reason for these drops, or rather the drops right here, meaning the recovery from the bottoms in February and the recent May 19th dates, is this level. Right now, the 100-week moving average looks like a barrier to us. But if these new peaks are not formed, the 100-week average could somehow be broken. With the tendency for selling pressure to arrive, we could drop down to $198 levels in the stock. Of course, it is beneficial to pay attention to this. Currently, a tired trend seems to have entered a resting phase. If something like this happens, let's clear it. The levels that will hold are here, if it shows us a base strength, meaning the level between $243 and $266. From here the stock might perhaps turn its direction upwards again with the chance to recover. However, if, as we mentioned, this zone is broken, frankly, this time an undesirable downward trend will unfortunately arrive. And as you will see, right here the 200-day moving average, or rather the 200-week moving average, might meet the stock as the next bottom location. And this time, descents down to not 260 but to 270 levels, down to 220 levels could occur in CEG. This is all we have to say about CEG for now. Hope to see you in another video. Goodbye to you all.